You're looking to buy a house and you're sitting there talking to your parents or your cousin or your uncle or somebody about it, and they told you, well, you can't buy a house without having 20% down. That's wrong. Totally wrong. Don't take advice from them. Call an agent or a lender. Let us lead you through this process. So let's talk about why you don't need 20% down. I'm Casey Jenkins with Oak Realty, and in today's world, there are many, many loan products out there, including ones as a first-time home buyer that you don't have to put anything down. So zero, big fat goose egg down. There are ones that are 3% down, 3.5%, 5%. You've got tons of options, but it is gone the days of needing 20% to put down on to buy a house. Now, that being said, if you have 20% and you put it down, you get rid of what's called private mortgage insurance, which is essentially foreclosure insurance that the bank makes you pay for. Aren't they really nice about that? So you've got two products that you can do as first-time home buyers, depending on whether you want to be in the city or whether you want to be in the counties or the country. The first one is VHDA, it's Virginia Housing. You get two mortgages basically, so you get a big one that's 96.5% of your down payment, and you get one that's 3.5% of your down payment. So it equals 100%. You don't put anything down. Payments are due the same day, all the same terms and everything. It's just two different payments. I personally had that one when we moved back to Richmond and we bought a house. It is a great program. They work really, really well with you, and they are constantly calling just to make sure you're good and have you paid and how can they help you and what questions can they answer. They're a fantastic company. The other one is called USDA, and that's if you're out in the country and you don't want to be around anybody. USDA will give you up to 103%, so you can even finance your closing costs into this mortgage. That was my very first mortgage when we lived in North Carolina. I had that one, and we bought the house for 114 and we financed 117,000. So we brought $1,000 I think to the table. I don't even think we brought that. But so those are two big mortgages that you can get as a first-time home buyer that you don't have to bring anything down. Now, that being said, now you're a second-time home buyer and you're like, now I need 20%. You still don't need 20%. You need 5 is the least amount you need as a second, third, fourth, fifth, umpteenth time home buyer. You just need 5%. Most people put down more than that because you're selling a house usually to buy the next house. So you usually have a big chunk of money that usually equals somewhere in that 10 to 20%. And they're usually taking all of that money and transferring it one to the other, trying to keep their mortgage payment very similar to their previous house. And that really helps you do that. But if you're like, I'm buying a house that's a fixer-upper, I really don't want to put it all down, 5% is all you need. That's it. And then you can get into the house and you can use the rest of it to fix or upper your house. So what my husband and I did with our current house. We put 5% down. We needed a new roof, new kitchen, new floors, a lot of new stuff in the house. And so we used the rest of it to fix the house up and make it look livable and a lot better and just a lot closer to what we wanted the house to look like. So anytime you're purchasing a home as a residential home buyer, so somebody who's actually going to live in it as an owner occupant, that is when you do not need 20% down. Investors, whole nother story, another video, another time, because you've got a whole different set of loans that go with you. But if you want to know more about any of these programs, the 5% down, the 3% down, the 0% down, whatever it is, let us know. We'd love to help you and walk you through each and every program that we have so that you can pick what's the best one for you. And our lender will sit down and give you multiple different options and say, here's all your options, which way would you like to go? Because within those programs that I listed, there's even more programs below that with grants and FHA, conventional, all this stuff that would make a lot more sense if we sat down and talked through it. So if you're thinking about making a move, give us a call, shoot us a text, and don't forget to like and subscribe.